Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, with a shift in the statement that indicated the end of the tightening cycle. The latest US CPI slightly beat expectations, but analysts expect the core PCE to print at 0.2% month over month, again following the CPI data. The labor market continues to soften but remains resilient, with US jobless claims beating expectations week after week. The latest ISM manufacturing PMI beat expectations, while the SM services PMI missed by a big margin. The US retail sales beat expectations across the board last week. The University of Michigan Consumer Sentiment Report jumped to the highest levels since 2021. The Fed members recently have been pushing back on the aggressive rate cuts expectations, and the market's expectations for the first rate cut were pushed back to May following strong economic data. In Japan, the BOJ kept its monetary policy unchanged as expected, with interest rates at negative 0.10% and the 10-year JGB yield target at 0%, with 1% as a reference cap. Governor Ueda repeated once again that they won't hesitate to take easy measures if needed, but he is becoming more optimistic on achieving their 2% target. The latest unemployment rate remained unchanged near cycle lows. The last Japanese manufacturing PMI fell further into contraction, but the services PMI ticked higher, remaining in expansion. The latest Japanese wage data missed expectations by a big margin, and as a reminder, the BOJ is focusing on wage growth to decide whether to tweak its monetary policy. The Japanese CPI recently eased further across all measures, which makes it even harder to expect a rate hike from the BOJ anytime soon. Now, on the daily chart, we can see that USDJPY erased most of the drop from the cycle high, with the pair now at the levels last seen last November. The price was overstretched at some point, as depicted by the distance from the blue 8 moving average. In such instances, we can generally see a pullback into the moving average or some consolidation before the next move. We indeed got the pullback into the moving average, and that's now where the battle between buyers and sellers will begin. On the 4-hour chart, we can see that the price pulled back into this key trend line, where we can also find the 38.2% Fibonacci retracement level for confluence. This is where the buyers stepped in with a defined risk below the 146.61 support to position for a rally into the cycle high. The sellers, on the other hand, will want to see the price breaking below this trend line and the support level to position for a drop back into the lows. On the 1-hour chart, we can see more closely the current price action, with the drop today caused by some optimistic comments from Governor Ueda. If the price were to rise above this previous support turn resistance around the 147.70 level, we can expect the buyers to increase the bullish bets into the cycle high. The sellers, on the other hand, lent on this resistance to position for a breakout of the trend line with a better risk to reward setup. This week is a bit more tranquil on the data front, with the major releases scheduled for the final part of the week. We begin tomorrow with the Japanese and the US PMIs. On Thursday, we have the advanced US Q4 GDP and the latest US jobless claims figures. Finally, on Friday, we conclude the week with the Tokyo CPI and the US PCE report.